Welcome back. Well, as promised, let's get some more fundamental analysis going on a whole host of stocks that we discussed. Prakash Diwan joins us. Hi, Prakash. Good morning and good to see you in. Well, the big deal we were waiting for, it's gone ahead and got announced over the weekend. How would you approach both these two names, UltraTech Cement as well as India Cement?
Good morning, Nigel. So, I know this is interesting. This was kind of anticipated, was in the making for a while. But the real benefits going to be towards the India Cement stock price. I mean, UltraTech, has already done what it could have done from this advantage that it gets. But since the promoters also are willing to exit from this in this transaction, I don't think there's much of an open offer that residually which will probably impact the price. So you probably see some profit booking closer to where it is today, and which is a fairly decent level from the time the first chunk was announced. So as you rightly said, it's difficult to time these transactions perfectly, but this seems to be probably the intermediate top for from a transaction perspective for India.
Okay, well, the other stock that we're looking at this morning is Dr. Reddys. Good set of numbers coming in. I mean, largely on the top line, right? It's a double-digit growth that DRL has seen. Prakash, any thoughts on the stock? Do you like it? Would you buy it now?
Good morning, Sonia. No, so I'll tell you what's interesting about the commentary from the management. They're finally talking about a double-digit organic growth after a fairly long time. Okay, so there have been issues, of course, in the overseas market that they've overcome in the last 2 quarters. But now if they're talking about this and even the other engines have started firing, the API part particularly, which is fairly lucrative in that sense, you'll not only have top-line growth, but you'll probably see some margin expansion and stability at high levels. So very, very decent. Of course, most of these pharma stocks, especially the bigger ones like Sun, Reddys, Cipla, they're quite well priced. So don't expect a very big bump up in that sense, but at least they'll probably be more resilient given the growth outlook from here on. So it's good if people don't have allocation to pharma. This is some time that you could look at adding this and FMCG, because when the market shakes off, probably these are sectors which will probably be easier to hide within. So I think Reddys definitely stands to be one of the best in that top league, the big pharma that we have. So, but as I said, valuations could probably unnerve a few people who look for too much of value investing as a methodology. But otherwise, the numbers and the commentary both are excellent.
Prakash, decent set of numbers coming in. In fact, Jefferies has also raised their target price on the stock. At this point, what would you do with Indigo post the numbers?
Well, the numbers are excellent. Continues to give you the confidence that this company will, be there and right in the top slot. But what's going to be difficult is it now becomes very vulnerable to any kind of a sustained increase in crude levels. My sense is the margins will probably improve in the current quarter that we are in. You had, the earlier quarter had a lot of disruptions because of which the cost would have gone up. But what's most promising out of the metrics that you look at, Sonia, is the number of kilometers available. Now, what has happened is they've increased their sectors mix in such a way that all put together, the number of flights that they have, that hasn't increased dramatically, but the sectors that they have kind of consolidated within is very promising. So you'll probably see revenue growth and, of course, margins come back. But at 4,400, is the stock pricing in all of that goodness? Most of it, yes. So you probably buy it on dips. If it gets closer to 4,000 on a bad day in terms of some sell-off happening in the broader markets, that's the time to kind of get it. Because the next move to 5,000 plus territories could probably be slightly slower than what we've seen from 2,000 to 44, 4,500. So, it's well poised, but I would not believe that it'll keep on rising in the same way that people have seen it do in the last 12 months.
Prakash, PNB came out with numbers and numbers look pretty strong. By the way, I don't know if you heard the Bandhan management, but what does the PNB numbers do for the stock and for PSU Banks as such? That's one. And second is Mankind. Stock sold off on Friday. A deal was that BSV deal was announced, of course, Thursday evening. But there was a call later and the management is saying that the deal will be accretive starting FY28. It's a very large deal for Mankind. So just your thoughts on these two.
Let me take the Mankind question first, because I know that was quite a disappointment. This deal was kind of anticipated to help mankind broaden its portfolio in that sense, because it's very, very strong in certain segments, but then the segments are very restricted. However, what the management is probably trying to do is they try to manage expectations by saying this is going to take a much longer time to do it. So, in that process, what's going to happen is your ROC is going to be completely compressed. And whenever that happens, the stock will never be able to, respond very favorably till people start seeing some sort of improvement there. So I would watch on if not quarterly basis, but at least half-yearly basis, what's happening on the deal in terms of, the contribution it can make. So, that's what. But on the ground, everybody's been talking about it quite favorably, Prashant. I must tell you, I don't know why the management sounded so cautious. So that's the take there. On PNB, I think, the metrics do look good, especially the quality of assets, which has been a issue with PNB in the past. But I think they have departed from that and made a fresh, move into growth-focused commentary as well. And this time around, the cost of funds, like everybody else, has impacted them. But they did indicate that they were likely to reduce that. So if that were to happen, probably you'll see some improvement continue. But yeah, decent set of numbers. What I would do based on these numbers is go ahead and buy SBI. Typically, if PNB has been able to do that, which is usually at the far end of the cycle, you'll probably have some of the other banks doing much better. So a Canara Bank or a SBI would probably stand a better chance to get re-rated upwards. You'd probably look at something like that. But yes, numbers are good. And the last thing on Manthan, I think it was very positive to see the body language, the conviction, the confidence that the new management is reflecting. There have been issues, of course, we all know. So the good news is the numbers are very decent from what they used to be, let's say about a year, 2 years back for Bandhan. So they're getting out of that history. But the not so good news is that this sector, especially the small loans and the MFI sector, is something which I feel is not in the best of health.
Right.
Probably any trigger from a quality perspective could derail things. So I would be a bit cautious.
All right, Prakash, we'll leave it there. Thank you very much for your views. Always useful. Appreciate you joining us here on CNBC TV 18. We'll